What is up, you guys? Nvidia had earnings yesterday. I wanted to make a video after the bell, but I just didn't have time. So here we go. In this video, we're going to be going over Nvidia. We're going to be talking about their earnings. We're going to be talking about if I think that Nvidia is a great investment. If you guys have watched any of the videos recently, you know we did do a pre-earnings deep dive into Nvidia, looking at the price that I'm looking to enter at. That price is right around $100. You can get an entire idea of why my thesis is that buying Nvidia at $100 is a phenomenal deal. Go back and watch that video we just most recently made. But in this video, like I said, we're going to go over the actual earnings. So Nvidia revenue has fallen 17%, but data center growth remains strong. Taking a look at Nvidia, they reported fiscal third quarter results on Wednesday for the period ended in October, and sales beat analyst expectations. Nvidia was up 1%, and actually looking at Nvidia as of right now, going into the close one day later, the stock is actually down 1.2%. So not a wild swing. A lot of times with semiconductor companies, you'll see these post-earnings swings up to 5, 10, 15, 20, sometimes 30%. So here's how they did. EPS was 58 cents adjusted versus 69 cents, so they missed. Revenue was 5.93 billion versus 5.77 billion, which they beat. Nvidia said it expected about $6 billion in sales in the fourth quarter, which was lower than Refinitive's consensus estimates of 6.09. Now, I just want to state this by saying, if you're thinking to yourself, how come the stock is not down significantly, even though they're basically coming out and they missed EPS and they're saying that they're actually expecting less for the fourth quarter. Why is the stock not down massive? And you guys know we talk a lot on this channel about uncertainty. I feel that the market would rather a company give estimates like that, that's 0.9 billion off of what they're expecting, as opposed to say, like, we just can't gauge it, we have no idea. So there is certainty there. So it looks like, just looking at their outlook, I don't know how conservative that is. A lot of times companies don't come in with super conservative numbers, but ultimately 6 billion is not phenomenal, but it's not terrible. Gross margins ended the third quarter. They were down 11.6% to 53.6%, which the company attributed to taking an inventory charge because of the low demand for data center chips in China. Revenue was also down 17% year over year. They expect to grow their gross margins in the current quarter to recover between 63 and 66%. Nvidia is closely watched by analysts and investors as a leading indicator for the health of the tech industry because it sells chips and softwares to many PC makers and cloud providers. In the past few months, chip companies like Nvidia have been slashing order expectations and warning that their customers are overstocked with computer parts. Nvidia CEO Jensen Huang said that the statement of the company, quote, adapting to the new macro environment. So you can imagine, you've probably seen this within your own company, or if you work with another company, like, a lot of people during the pandemic were ordering computers, ordering camcorder, ordering every possible piece of technology to work remotely that you can possibly think of. And there are probably a ton of companies that just have this crap sitting around in their IT department. Nvidia CEO, we already went over that. The PC gaming market is slowing after that pandemic boom. Nvidia graphics cards, which have been hard to find in stock in 2020 and 2021, are now seeing retail discounts, which is actually good for me because I want to build a PC soon and I'm tired of chips being so expensive. Nvidia also recently announced a new generation of graphics cards, which were priced higher than their initial previous models. Nvidia's gaming division reported 1.57 billion in sales, down 51% year over year. That's honestly, like, that's expected to me. Nvidia, because if you look at this time last year, lockdowns were still happening. People were still home. There was a lot more work from home. People were definitely playing more video games last year. Nvidia said that it was selling less to retailers because they have more inventory than current demand. That's how supply and demand works. It said that macroeconomic conditions, in addition to China's zero COVID policy, are hurting consumer demand. A brighter spot was Nvidia's data center business, which reported $3.83 billion in sales and is up 31% year over year. Nvidia attributed the growth to sales in the US, cloud service providers, and consumer internet companies. In July, Nvidia cut its guidance for October quarter, and they also warned in August that it would be hit by US export controls that prevent some fast artificial intelligence chips to be sold to Chinese companies. In November, it revealed a new chip is designed to meet that US export rule. Nvidia said that it reduced its sales from GPUs borrowed in China would be largely offset by its alternative products. Nvidia said smaller lines of business, including professional visualization and automotive chips, they are small. Professional visualizations shrunk 65% on an annual basis to 200 million, and automotive actually grew 86%, but is still really small, reporting only $251 million in sales. Only 251 million. The company's other category reported 73 million in revenue, and it included Nvidia's cryptocurrency mining chips, CMP. The company said that sales from the CMP were, quote, normal. Quote, we believe the recent transition in verifying Ethereum cryptocurrency transactions from proof of work to proof of stake has reduced the utility of GPUs for cryptocurrency mining, said the company. Nvidia spent $3.7 billion on share repurchases and dividends during the quarter. That's a good sign. When companies are buying back their shares, they believe the company is undervalued. A company would only do a repurchase program if they believe that the price of the stock is significantly worth less than what the company is worth. The inverse happens when a company believes that it's overpriced short term. What they will do is they will sell shares to the market to raise capital and to make a profit because they just believe the stock is overpriced. And we see this happen a lot of times. So overall, not bad. Like, Nvidia earnings were kind of what I had expected. I feel that if you're an investor in Nvidia, 90% of people will probably be upset by those earnings. But for me, who looks at, I feel like the economy and investing in a company as like this is what's expected. Like we had the stock in 2019 go from $34 2 years later to $326, and now the company has gone from $326 down to about $163. And to be quite honest, I think the company is worth close to, I would say fair value on Nvidia is probably in the 140s, 150s, but I need to be buying it at a deep discount. And so as always, I will be waiting. For me, anything under $100 is a phenomenal buy. And I don't know if we'll see that. I don't know. I think we will, but I don't know. Ultimately, if you're an Nvidia shareholder, I feel that this was pretty good earnings and as expected, but we'll see what happens. I still believe in the company long term. I still think if you're an Nvidia shareholder, you're going to make bank long term, but for me, it's just not in a buying point. I hope this video helps. Please comment down below anything you think I missed. Please comment down below if you completely disagree with me. I would love to hear your guys' bullish and bearish thesis. As always, thank you for all the support, and I'll see you next time. Peace.